We're seeing Brent crude oil open trade today in Asia down nearly 2%, sort of declining. We're currently trading at 91.32, so taking a bit of a hit. Ultimately, news overnight that the potential for this sort of Goldilocks moment that Iran deal will be done. It feels like a famous Irish play, Waiting for Godot, and he never arrives. But let's kick off this morning in the one of the world's top three biggest oil importing countries, India. Narendra Taneja, the leading energy expert in India. Narendra, your thoughts on $90 average oil on Brent and what its impact is on India? It would appear not very much.
Well, $90 per barrel Brent is a terribly bad news for India. Since we're a large importer, heavily dependent on imports, roughly 86% of total requirement is imported. And so anything which is like, let's say, more than $67, $68 per barrel is a bad news. So on the one hand, we see Brent rising, and at the same time, we see the geopolitical tremors we see in Europe and also, of course, in part of the Middle East, including drones, give sleepless nights to consumers in India. And at the same time, we also are very you see a lot of anxiety because this defunding oil campaign that's going on in the western part of the world, is another issue which is very disturbing. We find very disturbing because defunding would mean that oil is going to go up on a sustained basis in about 15 to 16 months from now, which of course is a very bad news because India's economy, like many others in the world, is heavily dependent on oil. And India is still an oil economy. We see actually many parts of the world still oil economy, but it seems that many in the world, western part of the world, they don't understand it. And defunding oil, underinvestment in oil and exploration production in the medium to long term, giving us a very difficult time to India. But today, yes, crude touching $90 per barrel, terribly bad news.
But yet in India, we're seeing the refiners going all out in India at these prices. The state-run Indian Oil Corporation, Bharat Petroleum Corporation, are reaching out to term contract suppliers, including Saudi Arabia, to try and buy extra barrels?
Well, simply because the demand is growing. You see with COVID, Omicron kind of getting out of the way, and 1.68 billion, vaccines administered. So India is in a rather safe zone when it comes to COVID. And number of cases rapidly going down. Like in my city, New Delhi, number of new cases yesterday was just 1,300 in a city of 20 million people. So which means that people have started going out, schools have reopened, businesses have reopened, people are out in the street, which demand is going up. So these refiners, they have to buy it and then sell it both domestically. Let's not forget India is also a major exporter of products, petrol, diesel, turbine fuel, and all that too. We export roughly 105 countries around the world, including most Western countries. So that component is also there. But most importantly, economic sentiments are very, very high. GDP is growing. We are back now as the fastest growing emerging economy in the world. When you look around India, talk with the people, COVID is very much there, but you see things are opening and enthusiasm is back, activities are back. So when that happens, since we are an oil economy, as I said, which means that more demand for oil. So these companies have to go out, reach out wherever they can and bring that oil to India for refining because the market is very much there. Market is active and time to come, demand is only going to grow.
Well, let's go to Venezuela and see if we can get any good news for you, Narendra, in terms of oil prices. Of course, one of the reasons oil prices are at these levels is because of the tightness in the market in the world. And Venezuela, holding the world's largest oil reserves, is practically pumping no oil. Jose Shalhoub, political risk and oil analyst in Caracas. Jose, we saw recently announced that PDVSA's debt levels rose to $35 billion last year. How bad is the health of this company? Is there any relief, any opportunity for it to get on the pathway to recovery?
Thank you, Sean. Thank you. Good morning to everyone, and thank you for the invitation. And apologies for the last time inconvenience due to a sudden power shortage here. Well, yeah. I mean, first of all, with I don't know, maybe 15 years ago, a $90 barrel for PDVSA and for Venezuela could have been very good news, because we used to have a very low cost barrel, low cost production barrel around $10, $15. But now our production costs are hovering around over $30, $35 per barrel. So it's not enough, and we're not producing enough. I mean, we are hardly reaching the 1 million barrels per day. And to really recover our oil production, we need to get massive investments. I always say that at the end of the day, we're going to need loans from international institutions in order to, there's lots of reports that they have done different maths and different calculus, and PDVSA alone will be needing around $50 billion in order to recover only in dedicated or focused on refining and to recover all our refining sector, which is heavily damaged, and which has caused our gasoline shortages that right now seems a little bit relieved, especially based on the help that we're getting from Iran. So yeah, I mean, we're definitely going to be needing lots of investments, loans from international institutions to repay those debts.
And is there any geopolitical maneuverings that would see a pathway to that?
Well, I mean, in my personal view, I think that this whole negotiations with Iran, and depending on the outcomes, if they get a deal finally, maybe it gonna cost. It's gonna have implications for Venezuela in terms of maybe Iran. Maybe Iran will lose incentives to keep on exporting condensates and oil to Venezuela. Remember, we have Iran and Venezuela has, they signed recently a swap deal, where, we get condensates and, in exchange, Venezuela sends Iran heavy crude in order to get gasoline and, lighter type of crude oils here, so in terms to alleviate the gasoline crisis here. So, yeah, I mean, Iran, if they get a deal with the US, they lose the incentives to keep on, challenging the US sanctions, and, as Venezuela is under sanctions as well.
Let's go to Chris Wood, CEO of Savanara DMCC, sitting in Dubai. Chris, this is a tight market. India is paying big dollar because it's a tight market, and obviously we're just hearing from Venezuela there's not going to be any extra supply coming out of there for a while. We seem to be caught in this slight dilemma that now inventories yesterday continued to decline in the US, 2 million barrels, and yet the news overnight that Iran could be coming back and bringing back maybe 2 million barrels a day. Your thoughts on that battle as we go forward in the price mechanism, further tightness on inventories, but the potential for new supply?
Morning, Sean. Thanks for having me on again. Well, we've heard it all week. There has been a consistent lack of investment in new oil fields over the last 2 years. So that's naturally going to start playing out now. We are seeing rig counts climbing. I think we've doubled what we were back at the beginning of the pandemic when we had the big decline in US rig counts. So that will bring some oil back into the market, but very slowly, very cautiously. You're also seeing this optimism on Iran. My personal view is I will believe it when it's done and we see the ink drying on the paper, because we've been here before. This time last year, we were close. Everybody was euphoric about how close it was. It will be a very difficult position for Venezuela. I agree with Jose on that one, because Iran will have no incentive to go supporting Venezuela there. But then generally what we're seeing, and if I look at the pricing, my sort of weighing of the pricing, there's more pushing prices up than there is anything pulling down. The only thing that's pulling the price down is COVID. It's getting less and less of an issue globally. We're seeing more markets opening up, more people being able to travel. Even, hey, Australia is allowing people to come in, which is amazing. And therefore, the other pressures of geopolitically, talking about the US sending more carriers and more troops to the area to support the UAE as the Yemeni situation hots up. Is that part of the pre-positioning for Iran on these negotiations? We'll see what happens there. And then you've got the Russia element. And now there was some slight rumors in the market yesterday about Putin backing away a little bit. Again, let's see the reality of that. Let's see the troop withdrawals in that region. But until that happens, I think you've got more tension pushing the upper price. So that is a bad thing for consumers. As like India, I believe we're going to continue to see oil bouncing around 90, which to me is $10 more than most economies really want to sustain now. It's drawing for the consuming markets. It's drawing money out of their markets and pushing it gratefully into the oil companies, and we're seeing that in the market with BP record share price, Equinor announcing dividend hikes. So again, I think this year is going to be the oil companies rebalancing their balance sheets, and then moving forward, paying the bigger dividends, attracting the investments. And also the other thing not to forget is supply chains are not fixed yet from COVID. There's a lot of work to do on supply chains before we get to somewhere where we can feel stable and things are in a better position.
Narendra, on that point, I mean, demand destruction, we saw in the first half of the what is it, the 2010-11 to 2015, $100 oil average. Everybody, India seemed to progress well then. Your thoughts on when does this, let's say $90 average in the first quarter, when does it start to impact demand destruction in Asia, not just India, but across Asia? What would be your outlook for the year at this altitude of price on demand destruction in Asia?
Well, good question. I mean, when you look at economies like India or Indonesia, for that matter, even Bangladesh and Vietnam, and I think China.
And these are countries with, like, Vietnam is 100 million people, Indonesia is nearly 300 million,
exactly.
Bangladesh is nearly 200 million. These are big countries.
These big countries and heavily dependent on oil. So I mean, I don't really see, even if the prices go up to $100 per barrel, that you would see any demand destruction, any significant demand destruction, because the economies are such, the very fundamentals that they need oil. Without oil, the economy will just come to a standstill, to complete halt. I mean, transition is happening, but transition is in addition to oil. I mean, solar in India, for instance, is in addition to oil. So solar is not growing at the cost of oil or the cost of natural gas. That's not happening. So that's all in addition. So I don't really see that, that would impact or lead to any kind of demand destruction in economies like Bangladesh, Pakistan, or India, or Indonesia, or Vietnam, or for that matter, even in China. So my sense is that, the only difference would be that economies like India and Bangladesh government will be forced to cut taxes. And therefore, their own fiscal discipline and fiscal deficit would be impacted. And of course, the value of rupee or taka in Bangladesh would be impacted. All that would happen to adjust and accommodate, what happens to oil prices. That's what I said, that, in India in particular, or you see the same in several of the economies in Asia, the worry is that, when the Western countries push for defunding, that don't invest in oil, this underinvestment and exploration in particular, that's worries us, because we know it, looking realistically, the oil horizon, natural gas horizon, 5 to 10 years from now, these economies are going to consume more oil. I mean, simply in order to achieve that.
Well, if we look at the immediate, economy,
yeah, I mean,
if we look at the immediate sense, what is the incentive of Saudi, OPEC Plus to produce more oil, and some of them can still add oil to lower prices, if you like, to meet the demand that's there. What incentive would they have to do so if demand destruction is secure?
Well, very good question. I mean, first of all, I don't really see that, except for Saudi Arabia, any other producer is in a position to actually suddenly start pumping more oil. I mean, even if the sanctions go tomorrow, against Iran, it will take them some time to rebuild their export infrastructure. Their export infrastructure is rather antique, and Russia is pumping, as much as they can, and so we don't really see. So only country Saudi Arabia. And good thing about Saudi Arabia is that they can look at the future. They know it. If the prices go beyond a certain limit, then these countries like India and many others will be pushed actually invest even more and fast track investment in renewables and try to artificially, reduce their dependence on oil, even if it means some inconvenience to the people or some damage to the economy. We don't think Saudi Arabia would want that. It's a very smart company. Aramco is a very smart company. So therefore, we think that, and at the same, let's not forget, behind the market, countries like India and Japan, United States, they are talking, they're talking regularly with big producers like Saudi Arabia, like UAE, like Russia. They're talking regularly. And we also have this hope, that this is the election year in the United States, election for Congress, that America is going to put even more pressure on Saudi Arabia to make sure the oil prices do not go to a level which ordinary consumer in the US find against Democrats. They vote them out of Congress. So there are many things are being studied, but my sense is in immediate term, we don't need to worry too much, but medium to long term, economies like India need to worry, because even if Saudi Arabia wants, even if market wants, even if they put diplomatic pressure on the big producer, this just would not be sufficient amount of oil available, because enough, investment is not going in that direction. That is biggest worry than what we, for instance, are going to face over the next 4 or 5 months.
Jose, it does appear that the IOCs, the international oil companies, are still incentivized to invest when the terms and the opportunity is there. In your neighborhood, Guyana is enjoying a big partnership now with ExxonMobil. What does the rest of the South America, Caribbean look like at this time for future new capacity beyond Venezuela, obviously with its own difficulties?
Yeah, well, it's known all the difficulties and and problems facing PDVSA, and that it will still face. We have, a changing, energy geopolitical landscape in South America with Guyana. We have Suriname as well. They have a joint basin that where different explorations have been, carried out recently. We have the case of Brazil. Brazil has always been a traditional oil producer, and Petrobras is right now is getting, a significant recovery after years of corruption and all that under this corruption scandal, Lava Jato. We have the case of Colombia as well. We have the case of Argentina, although with all these political problems under Alberto Fernandez, its iconic, shale gas field Vaca Muerta is experiencing, different problems, different financial problems. So for Argentina, it's going to be in some sort of way the case of Venezuela. Well, the case of Mexico, it's really problematic as well under López Obrador, after, being in the last 5 or 6 years under the previous administrations, Pemex was really being under important reform, reform process. But right now, Pemex is, facing lots of problems, lots of accidents, and but I think that in South America is where the changing landscape is going on, taking in consideration, especially Guyana. But Guyana needs to be careful with, all these cases of resource nationalism, and it needs to handle really well all these resources and all these, inflows of, money that's going to enter to such a small country as Guyana. And, it needs to consider the case of Venezuela and all what's happened here in Venezuela in the last 15 years with all the corruption and all what's been happening in Venezuela. So Guyana, it's the perfect example of what needs to be done with recent oil inflows. That's it.
It certainly seems like there's a potential for real capacity building in South America, but the politics just seem to be horrible on so many levels. Chris, I'd like you to speak a little bit it's a bit over the horizon of time, but maybe not. As you mentioned in your opening comment about capacity, lack of investment in capacity, Narendra's point that while the West is seeking to guide its policy based around peak oil demand, and what the implications for that is east of Suez. You ran a small refinery in Fujairah for a number of years. The impact of peak oil demand in the West and the policies it triggers and is triggering versus oil demand in the East, which, as Narendra mentions, major economies still heavily dependent on hydrocarbons in the fuel mix.
It's an interesting point, because are we seeing peak oil demand now, or are we seeing it increase? And clearly that's part of the story of COVID, where
well, certainly in the West, it's quite flat, right? In the US and in Europe, it's been pretty flat for a number of years now, demand-wise.
Well, what I was referring to is COVID suppressed demand even more. We're seeing demand come back to where it was pre-COVID. So we're seeing some growth in that, but you are right in saying that those are mature markets. They're looking at the next step of evolution of going into alternative fuels, whether they're biofuels, whether they renewable linked to battery. But you've got huge economies in Asia and also in Africa, South America, that all need to grow and all will require, unfortunately, for a lot of the climate lobbyists, that they're going to need oil to grow and to develop and to get up to a point where they can start thinking about sustaining and moving towards a sort of Western style of greening their economies. Not to say that I have no doubt a lot of those countries are going that direction in parallel, but what you're seeing is the general growth requires the oil to support that, is support the growth on top of that investment going into the renewables that they're doing today. And I think
it was certainly an interesting.
Sorry.
It was. I mean, it is an interesting argument made by BP overnight. The idea that we need to, that when they were being faced with this argument of a windfall tax, they're saying, no, we need that revenue in order to be able to transition. So don't take our black money, because we need it for our green destination. Let's go to the survey question and let everybody in the room have a view on some of these issues that we're talking about. The best solution for high prices is high prices. Will Brent at $90 average in the first quarter trigger demand destruction in Asia? We're seeing so far the first half of Q1 oil prices, Brent averaging just below $90. So the average for the quarter looks pretty solid, like it will be around $90 on Brent. My question is, will it trigger demand destruction in Asia? We heard some comments on that this morning, and we'll have to see where that goes. Narendra, looking at the outlook for India, obviously it's still early in the year. Forecasts, this fastest growing emerging economy, etc. Where are some of the headwinds? Obviously, the oil price is some sort of a headwind for India coming out of COVID. What are the other headwinds you're facing, do you think, as you look at that that potential of 10% GDP growth in 2022?
Well, of course, oil, of course, is a very important player when it comes to the overall, the chessboard, whether economic India, political India, for that matter, even social India. For the first time, let me share with you, oil has always been a politically hot potato in India, but the first time we have elections going on some of the state parliaments. For the first time, some political parties are now offering free oil to the voters. They say, if you vote us, we come to power, we'll give you oil for free. Some parties are saying 2 liters, some are saying 1 liter and all that, but it's the first time. So this clearly shows that, oil has become a very, very hot potato in politics, which means if oil prices go $90 per barrel tomorrow, 95 or that matter, 100, that means the government will have no option but to cut taxes. Because beyond a point, the ordinary consumer would not be able to, take that burden. So the government will have to share that burden with the consumer by lowering the taxes. So, but would that lead to demand destruction? Would people stop consuming oil? Because that's not going to happen simply because that means basically, stopping economic activity, whether you are an individual or you are an organization or you are a business, and that is not an option because the government wants business to grow. Government is incentive. Look at every single policy of the government. They are incentivizing business. They are encouraging people to launch businesses, reopen factories, go for optimum production. At the same time, look at number of car sales in India or motorbikes and all that is growing all the time. You see, so you need oil to run all these millions and millions of motor vehicles. In my city, Delhi alone, we have got 15 million motor vehicles. So you need oil for that. So the simple fact is that
15 million motorbikes
in Delhi alone.
15 million motorbikes in Delhi alone.
In Delhi alone, yes. So imagine in a city of
God, what would happen if they became cars?
Exactly. So this is what the reality is. So that's what I'm saying. That destruction is a very strong word. And we are quite hopeful that post this summer, that is May and June in India, we're going to see economy almost back to normal, and which means demand for oil is only going to grow, demand for natural gas is going to grow, demand for energy as a whole is only going to grow. And which means that if prices go there, the government, whether it's federal government or the state government, would be forced to cut taxes because there is a big kind of, they make roughly 50 to 52% of what we pay at the petrol pump goes to the government, whether it's state or the federal. So there is always a room. But that means the government would be forced to cut some of the social schemes that they run. And there are hundreds of them. When they do that, there would be a political cost for political parties in power, whether it's at the state or at the center. So it's a big vicious circle. So therefore, the government is trying very hard at the national level, in touch with the US, in touch with Japan, even with China, and in touch with Saudi Arabia, Kuwait, UAE, and all that, to do something about it. Because prices go beyond that, then we will have no option but to invest more in renewables, and that may be not a good news for you in the medium to long term, especially medium, 5 to 7 years. Then India would be in a different boat altogether. If they don't want that to happen, then they have to keep oil prices below a certain level. Up to 80 would be acceptable.
I think perhaps
more than 80 would be.
I think I think we've come to a point where being able to control this price with more supply seems a little bit like we've moved, unless you get Iran or Venezuela or some of these big producers or big reservoir holders back into action. The current 23 within OPEC plus, maybe bar Saudi, I think everybody's pumping what they can. Jose, let's just wrap up with you. Let's get the survey result. I wanted to get your views on this Chevron story. Oh my goodness, 50-50. Will this create demand destruction in Asia? A divided room, always good when that happens. Jose, we have this story out of Venezuela or out of Washington, or the Biden administration is considering a Chevron proposal to allow them to get paid some unpaid debt in Venezuelan oil cargoes. Your thoughts on this story from a Venezuelan perspective? Is this likely to happen? Is this a pathway forward?
Yeah, I mean, I know that report. From, if you ask me, as a Venezuelan and as a person who had previous experience in PDVSA, yeah, Chevron is one of the longest standing international oil company here in Venezuela. I mean, it's been operating in the country for over 100 years, and it's been one of the best companies with the highest reputation in, between the many international companies that operated here, between Exxon, between ConocoPhillips, when they used to operate here, when they used to participate in joint ventures with PDVSA. But if if Washington moves ahead with that waiver, I think it would be a good idea. And I think that it could be a good idea if Chevron expands operations here as well, because it's one of the few international companies that remain here. And they, the facilities that Chevron has here, I mean, since long, they are one of the best facilities, that exist in the country. I mean, the security protocols they have here, I mean, it's very well it has a very good reputation. And I think that it could be a good idea if Washington moves ahead, the Biden administration moves ahead and, gives that waiver to Chevron. I think it's a good idea from my perspective,
Well, it could certainly signal some kind of an incremental path forward for Venezuela, holders of the world's largest crude oil reserves, at a time in which clearly there is demand for more oil. We'll have to leave it there today. Brent trading at 90.68. Will it break down through that 90 level after going as high as $94 last week? We'll have to wait and see. But at the moment, still hovering above $90 on Brent, a little below 90 on WTI. A lot more to happen this week. We'll see if the news out of Vienna continues to be optimistic towards an agreement and the release thereof. Iranian oil in the second half of the year. Thank you guys very much. Narendra, as always, great to get the update from India, and Jose, of course, South America, really, really helpful to get insights there. And Chris Wood, of course, sitting in the middle of the world here in the UAE with the Burj Khalifa right behind him. That's literally the middle of the world, right? That's the mark. Burj Khalifa. Chris, thank you as always. Have a great day, everybody. Here every morning, 10:30 UAE time. All the best. Thank you.
Have a great day.